Question 8. How easily can you buy and sell shares of the ETF? Consider the bid-ask spread and trading volume. The ease of buying and selling shares of the Invesco SP 500 Equal Weight ETF, RSP, depends on two key factors, bid-ask spread and trading volume. Here's a breakdown of how these factors influence RSP's liquidity and how they might impact your buying and selling experience. Bid-ask spread. Definition: the bid-ask spread is the difference between the highest price a buyer is willing to pay for a share, bid price, and the lowest price a seller is willing to accept, ask price. A narrower bid-ask spread indicates higher liquidity, meaning you can likely buy and sell shares at prices closer to their fair market value. Impact on transactions. A wider bid-ask spread can eat into your returns when buying or selling RSP shares. If you buy at the ask price and sell at the bid price, you'll effectively pay the spread amount. For example, a $100 share price with a 10-cent bid-ask spread would mean you pay $100.10 to buy and receive $99.90 when selling, incurring a cost of 20 cents per share. Trading volume. Definition: trading volume refers to the number of shares of an ETF that are traded on an exchange in a given period. A higher trading volume indicates more active trading in the ETF, making it easier to find buyers and sellers for your shares. Impact on transactions. Lower trading volume can make it more challenging to buy or sell RSP shares at your desired price. You might need to accept a wider bid-ask spread or wait longer to find a matching order, potentially impacting your execution speed and potentially returns. Specifics of RSP. Generally liquid, RSP is a popular ETF with a large asset base and high average daily trading volume. This translates to a relatively narrow bid-ask spread and easier execution of buy and sell orders compared to less liquid ETFs. You can find more information about RSP's average bid-ask spread and trading volume on financial data websites or directly through your brokerage platform. Market conditions. Market conditions can also influence liquidity. During periods of high volatility or lower overall trading activity, the bid-ask spread for RSP might widen slightly, and trading volume could decrease. Question 9. How closely does the ETF's performance track the underlying RSP index? What are the potential causes of tracking error? The Invesco SP 500 Equal Weight ETF, RSP, aims to closely track the performance of the SP 500 Equal Weight Index. However, there will always be some tracking error, meaning the ETF's return won't perfectly mirror the index return. Here's a breakdown of how closely RSP typically tracks the index and what factors can contribute to tracking error. Degree of tracking. Physical replication. RSP uses a physical replication strategy, which means it aims to hold all the securities in the SP 500 Equal Weight Index in proportion to their weighting, around 0.2% for each of the 500 companies. This approach generally leads to a high degree of correlation between the ETF's performance and the index. Historical performance. While past performance isn't a guarantee of future results, RSP has historically tracked the SP 500 Equal Weight Index relatively closely. You can find historical performance data for both the ETF and the index on financial websites. Causes of tracking error. Expense ratio. The ETF incurs expenses for managing the fund, including buying and selling securities, administration costs, and fees to the index provider. These expenses are reflected in the expense ratio. The expense ratio effectively reduces the ETF's returns compared to the underlying index, contributing to tracking error. Bid-ask spread. As discussed previously, the bid-ask spread represents the difference between the buying and selling price of the ETF's shares. When buying shares, the investor pays the ask price, which is slightly higher than the net asset value, NAV, of the ETF. Conversely, when selling shares, the investor receives the bid price, which is slightly lower than the NAV. These bid-ask spread costs can contribute to tracking error. Rebalancing impact. The ETF rebalances its holdings periodically to maintain the equal weighting of all companies within the index. During rebalancing, the buying and selling of securities can incur transaction costs that slightly impact the ETF's NAV and potentially introduce some tracking error. Dividends and cash flows. The timing of dividend payments and other cash flows from the underlying holdings can cause minor discrepancies between the ETF's return and the index return, especially if the ETF reinvests these cash flows at a different time than they are received. In-kind distributions. In rare cases, the index provider might distribute underlying securities instead of cash dividends. The ETF might need to sell these securities to maintain its cash holdings, potentially leading to transaction costs and tracking error. Overall, tracking error for RSP is typically minimal due to its physical replication strategy and the large number of holdings in the index. However, the factors mentioned above can contribute to some minor deviations between the ETF's performance and the underlying SP 500 equal weight index. Question 10. Which index provider's RSP index does the ETF track? The Invesco SP 500 equal weight ETF, RSP, tracks the SP 500 equal weight index, which is provided and calculated by SP Dow Jones Indices. Here's a breakdown of the key players involved. Invesco, the investment management company that issues and manages the RSP ETF. SP Dow Jones Indices, a leading provider of financial market indices, including the SP 500 index and its variants like the SP 500 equal weight index. Role of SP Dow Jones Indices. Index construction and maintenance. SP Dow Jones Indices is responsible for constructing and maintaining the SP 500 equal weight index. This includes selecting the 500 constituent companies, calculating their equal weights, 0.2% each, and making any necessary adjustments based on index methodology rules. Data licensing. Invesco pays a fee to SP Dow Jones Indices for the right to use the SP 500 equal weight index as the benchmark for the RSP ETF. Transparency and credibility. Index methodology. SP Dow Jones Indices publishes a methodology document outlining the specific rules and calculations used to construct and maintain the SP 500 equal weight index. This transparency allows investors to understand how the index functions. Credibility of SP Dow Jones Indices. SP Dow Jones Indices is a well-established and respected provider of financial indices. Their involvement in providing the underlying index adds credibility to the RSP ETF's approach of tracking the SP 500 equal weight index. Question 11. How does the performance of the RSP ETF compare to actively managed RSP mutual funds? Comparing the performance of the Invesco SP 500 equal weight ETF, RSP, to actively managed RSP mutual funds can be complex. Here's a breakdown of the key factors to consider. Investment approach. RSP ETF tracks the SP 500 equal weight index, offering passive exposure to a blend of value and growth stocks within the U.S. large-cap market. The weight of each company is 0.2%, ensuring no single company dominates the performance. Actively managed RSP mutual funds employ portfolio managers who actively research and select RSP stocks based on their investment philosophy and analysis. These funds aim to outperform the SP 500 equal weight index by capitalizing on undervalued stocks or exploiting market inefficiencies. Historical performance. Passive versus active debate. There's an ongoing debate about the historical performance of passive investments, like RSP, compared to actively managed funds. Studies have shown that a significant portion of actively managed funds underperform their benchmarks after accounting for fees. RSP versus actively managed RSP funds. While RSP's past performance doesn't guarantee future results, it's worth comparing its returns to those of actively managed RSP mutual funds over various timeframes. You can find this information on financial data websites or directly through fund prospectuses. Cost considerations. RSP expense ratio. RSP typically has a low expense ratio, around 0.2%, reflecting the cost of managing the ETF and tracking the index. Actively managed RSP mutual fund fees. Actively managed RSP mutual funds have higher expense ratios compared to RSP, typically ranging from 0.50% to 1% or even higher. These fees cover the salaries of portfolio managers, research costs, and other operational expenses. Performance comparison. Potential outperformance of active funds. Actively managed RSP mutual funds, in theory, have the potential to outperform RSP by identifying undervalued stocks or exploiting market inefficiencies. However, achieving consistent outperformance is challenging, and many actively managed funds fail to do so after fees are considered. Lower costs of RSP. RSP's lower expense ratio can be a significant advantage. Even if an actively managed fund slightly outperforms RSP before fees, the expense ratio can erode those gains for investors. Question 12. What are the advantages and disadvantages of directly investing in individual RSP stocks compared to the ETF? Here's a breakdown of the advantages and disadvantages of directly investing in individual RSP stocks compared to the Invesco SP 500 Equal Weight ETF, RSP. Direct investment in individual RSP stocks. Advantages. Potential for higher returns. By selecting individual stocks with high growth potential, you might outperform the performance of the overall RSP market, which is captured by RSP. However, achieving this consistently requires significant research, skill, and taking on more risk. Greater control. You have complete control over your portfolio composition, allowing you to choose specific companies you believe in and potentially tailor your investment exposure to align with your investment thesis. Disadvantages. Higher risk. Investing in individual stocks carries a higher risk of loss compared to a diversified ETF, like RSP. The performance of a single stock can fluctuate significantly, and a bad stock pick could lead to substantial losses. Time commitment. Effectively researching and selecting individual RSP stocks requires significant time and effort to stay informed about the companies, their industries, and overall market conditions. Lack of diversification. Owning a small number of individual stocks exposes you to higher concentration risk. If a few of your chosen companies perform poorly, your entire portfolio could suffer. Emotional investing. The temptation to make emotional decisions based on market swings can be higher when directly owning stocks compared to a more hands-off approach with an ETF. Investing in RSP ETF. Advantages. Diversification. RSP offers instant diversification across 500 companies in the SP 500 index, mitigating the risk associated with any single company. Lower risk. By spreading your investment across a large basket of stocks, RSP reduces the impact of a poorly performing company on your overall portfolio return. Lower costs. The expense ratio of RSP is typically lower compared to the combined costs of buying and potentially trading individual stocks yourself. Convenience. Investing in RSP is a convenient way to gain exposure to the RSP market without the time commitment required for individual stock picking. Disadvantages. Capped return potential. RSP's performance is tied to the SP 500 Equal Weight Index. While it can outperform a traditional SP 500 ETF during certain market cycles, it might not capture the same level of upside potential as a perfectly timed selection of individual stocks. Less control. You don't have any control over the specific companies held within RSP. The index methodology dictates the holdings and their weightings. Alright, ETF friends, that's all the time we have for RSP today. So, the big question, is RSP a good fit for you? If you prioritize diversification and a hands-off approach, RSP could be a solid core holding. It offers broad exposure to the U.S. large-cap market without the concentration risk of a traditional SP 500 ETF. However, if you're chasing high yields or have a strong sector bias, there might be better options out there. Remember, the best ETF for you depends on your individual goals and risk tolerance. Do your research, consider your comfort with volatility, and don't be afraid to chat with a financial advisor. For more in-depth ETF breakdowns and investing tips, be sure to like and subscribe to Chat ETF. Hit the notification bell so you never miss a video. And until next time, happy investing!